So for Q4, we're seeing earnings per share of $5.16. That's a beat compared to the $4.64 the street was anticipating. Revenues also a beat, $22.1 billion. Street was anticipating $20.61 billion. And I know we were talking about data center revenue. May as well bring that up. Data center revenue for Q4 coming in at $18.4 billion, higher than the $17 billion anticipated. Similar for auto, $281 million, a little bit higher. And I'll continue to go through the results and get back to you shortly with guidance.
Kristina, yeah, stick around. I mean, it looks like the outlook for the first fiscal quarter of 25 is $24 billion in revenue, which I think would be versus $22 billion expected. I mean, that's certainly a beat, right?
It is a beat, but if you think about the buy-side whisper number that everybody was talking about, $23 billion, some even saying a little bit higher, so it's not a massive beat. That was the big concern going into this earnings report as to why we saw the stock drop 3 days in a row. There was concerns that the magnitude of the beat wasn't going to hold, and you had some profit-taking leading up to it. Could be contributing to the 3% drop that we're seeing right now. To your point, that $24 billion, it's still strong, especially for Q1 guide, but it's not the same type of caliber that we've seen in the two previous quarters.
All right, Pat, want to get your reaction to the numbers that we do have so far with a beat on the top and bottom lines, beats for data center revenue, beats for auto. And to John's point, it looks like better than expected, or at least stronger fiscal first quarter revenue guidance as well.
Said I expected a beat, and that's exactly what they did. And, you know, it's kind of a double-edged sword when you see availability getting better, which is, hey, I can probably get more cards to you that you need, but you lessen pricing power. So very positive on that. And I think, you know, again, the size of the auto business in the, you know, range it is in the 200 million-ish doesn't make an overall huge statement, but it is a good sign for the future of what they need to do, whether it's 2, 3, or 4 years down the road.
Gil, looking at data center specifically, it looks like the number came in at $18.4 billion for Q4 versus $17 billion expected. And of course, that's what you need if you're going to get revenue beaten by $2 billion, is you need strength in data center. What does that say about the continuing data center demand and maybe about the other areas, including gaming as well, which you said would be a little difficult to parse out?
Right. So the fact that the number is so high and that they guided for an even higher number next quarter is a reflection of what we heard from the hyperscalers on their conference call. We heard from Amy Hood and Microsoft. We are accelerating our purchasing. We heard from Mark Zuckerberg very specific goals about the amount of GPU he needs. We heard from Amazon that they're finally getting access to supply. So that demand is still ramping through the year, and that's reflected in these numbers. I would just say Kristina did a very good job reporting that the whisper number on the buy side was so much higher than the consensus number that that because they didn't quite get to that number, maybe the stock isn't showing the upside that it would ordinarily with this kind of result.
All right, we're going to go back to Kristina. We're not going back to Kristina. Pat, I'm going to go to you here because just looking at first quarter fiscal 2025 outlook here, in terms of margins, GAAP and non-GAAP gross margins expected to be 76.3, between 76.3 and then 77% respectively, plus or minus 50 basis points. I guess walk me through the importance of gross margins as we do look to another year for this company where the expectations have been so strong and where, interestingly, the stock is now trading up about 1%.
Yeah, so Nvidia has had pricing power for the past 18 months, particularly on its new line. When you can't get it, you can essentially name your price. And a car that would normally go for $20,000 being sold for $40,000 and even more on the open market, it's great. On the flip side, your cost of goods sold from folks like TSMC and the folks doing the high bandwidth memory are charging more. But net, the margins look incredible, and I'm glad to see there wasn't necessarily a movement down that you might expect as supply from TSMC wafer and packaging improved. So it's impressive.